This is a company that a lot of people have had a lot of interest in. A lot of people have very, very high expectations for exponential growth down the road. And this is totally an expectations play. Well, clearly, investors are looking at further potential upside here because the stock was priced at 17. It opened right around 24. It's trading at 25. Now, sometimes the first few days of an IPO like this, it takes a while to settle out. You know, there's a number of different things in play. Clearly, it trades at a very, very high valuation. Nobody's buying it for its valuation. They're buying it for everything is an expectations game, long term on the future, looking at what other social media companies have done and the potential for it to have exponential returns. You know, we'll just have to see how this plays out. They're trying to label themselves as a camera company. I think a lot of people view them as more of a messaging company. There's an issue with the lack of voting rights for shareholders. One of the things they highlighted in their financials was their expenses were growing last year a little bit more at a little bit faster rate than their revenue was growing. Now that can be very common for a lot of emerging companies, but it's also something to keep an eye on. Look, anytime you see a company go public that's not making money yet, investors should be a little weary and definitely do their homework. This is a classic buyer beware situation.